Okay. Okay, so what we're going to cover in today's training is providing more clarity on optimal blue and lock changes. And I think probably what would be most helpful is let's focus on if an amendment comes in, because that obviously might change the price. So like tequila on the Chiriboga file, right? Like getting more clarity so the more confident you are. Like Grace had one with the Fletcher file where an amendment came in and then we've got to kind of resubmit the lock. And so understanding that, how that process looks. So we'll go on over amendments. We will go over PMI. So like, what does the screen look like? So that was something Tequila wanted with single premium. She would like to see what the screen needs to look like. I think also we can go over low, do a little bit of a revisit on low appraisals and even rapid rescores. And lastly, I would do LQI and waiving escrow. So I think I got about 6 things I think we can go over that hopefully will be helpful where because Tequila had to do a lock change because when she did the LQI report, she accidentally pulled a new credit report and the credit score dropped from 780 to 773. Tequila was like worried out of her mind that was going to affect some things. But I think if she'd known how to do the OB profile change correctly, she would have not been panicking, right? Like she just and and that's also another thing that reminds me, Tequila is the little box, the automated underwriting, AUS. Make sure it's non-specified. So I'll show that screen because Grace probably isn't aware of that. Roger, I think you probably know that, but it probably still didn't do it. So let me just share my screen and let's go through, we're going to go through amendments first. So this applies to Chiriboga for Tequila and this applies to Grace for the Fletcher file. We've already closed the Fletcher file, but at least what my notes are, Roger, you can jump in here because I know you were the one that was calling me on Tuesday when we kind of realized this, was we were closing this loan on, what day was that? 5/21, okay? And all of a sudden, on 5/17, we got this amendment added into the file, okay? So closing 5/21, the loan got resubmitted for CTC by Brodra late on the 14th, and then on the 17th, an amendment came in, and they changed the sales price to $448. And 13,000. So Brodra, I think, knew about the $13,000 change, but for some reason this portion up here just kind of got missed, and I'm not exactly sure why. But then what happened was what created a little more confusion was the loan amount because this particular borrower is doing single premium. So let's kind of walk through that. So when you see this, a change up here in box number 1, we've got to change the purchase price and then this loan amount here, right? So let's walk through what that should have looked like to kind of provide clarity. Is originally the purchase price was $455 and then it got dropped to $448. So we got a clear to close at $455 and then all of a sudden kind of got a little surprised. So and then you can see the loan amount here matches the amendment, okay? But I think Roger was like, well, hey, 380,800 is the new loan amount, but look here with the single premium, it's 382,513. So this is a little bit of what Tequila was saying is, what should the screen look like? So in this scenario, you've got a base loan to value at 85%. So Grace, quick quiz question, is PMI priced on your base loan to value ratio or your total loan to value ratio? So we have an 85% LTV and we have an 85.382 CLTV because it's factoring in that higher loan amount. So do you happen to know the answer to that? If you don't, it's okay. It's just a little bit of a quiz.
I don't know. Is it the combined?
No, it's the base.
So it's the base, the first one.
Yep, exactly. So you can even see here 15% down, right? So if we look here on this open screen, you can see they're putting 15% down. So therefore your LTV before the PMI accounts for is 85%, right?
Okay. Yeah.
So you price the, when you run it through, then Tequila, the way you see it here on the screen, is you have your base loan amount. This is how much they're paying to buy out the PMI. And then they're adding it to the loan. So it's what's called financed MI. So it's just like an FHA loan, but we're doing it on a conventional loan because then we don't have to charge any monthly PMI. That's why a lot of times borrowers
You're paying it up front.
They're paying it up front. And so why that's a benefit, a lot of lenders don't know you can do this, but if you have a good credit score above 740, it's a good product because 1713 you're adding to the loan. That's spread over 30 years. So you're paying about $4 a month in PMI. Okay, because it's added loan, but you're paying nothing monthly. Well, monthly PMI typically runs about $100 to $200 a month.
Wow.
So I could pay $4 a month as opposed to paying $100 a month. It's a way better deal. Also, it helps us if our DTI was ever tight. Like, let's say the DTI was at like 48%, and then you add on monthly PMI. Well, now it throws the DTI over 50, and we can't approve the loan. But if we do single premium, well, now all of a sudden we have an approvable loan. So it's a good solution to get loans done, and it's also a good solution to give people a better payment. Because if, let's say, someone's very payment sensitive and they say, I really don't want a payment above 1,600. Well, in this particular, or let's say they don't want a loan, a monthly payment above, 2,500. Well, with single premium, I can get them a payment under 2,500. If I added on normal PMI, the payment might be closer to 20. It would be over 2,500 because I got to charge it to them monthly. Does that make sense?
Right.
Yes.
So what the credit score have to be a 740?
I would say I don't typically recommend it unless you're over 720. I don't think it's a good deal. I think it becomes too expensive. I also prefer doing it when you're putting 10% down. I think it's a better deal with 10% down and a 720 FICO. So it's a really good solution between 10% down and 20% down. It is also a good solution in this market if appraisals come in low. And so that's another reason I'm selling this product probably more than you may have experienced previously at other companies, is that we're seeing more low appraisals. So it helps solve problems because then they don't have to pay it out of pocket. They can kind of, in essence, finance that change to the LTV. And it only costs like $4 a month or $5 a month. But Tequila, this is what the screen should look like, is you have your base loan amount, and then you want this. It's very important that this screen matches the lock screen. So if we go, we looked right here, this was 380, 0.45, and 382. So if we go to the lock screen, if you hit this, and I'm recording this, so you'll be able to kind of come back and watch this because I know I'm going a little fast. Is you go to the lock screen and you're going to want to make sure these match, because otherwise Bowie will give you a hard stop. So Grace, when you're going back to resubmit, it'll tell you something's wrong in the file. So you want to go, where's the, hold on.
You want to go lock confirmation, right?
There we go. I did it. You're right. Where's the lock confirmation? Oh, weird. Huh. I guess the lock confirmation.
I guess it went away.
Because it's closed. Yeah, because it's closed. The loan's already closed. Interesting. Okay. Well, normally you would hit lock confirmation and then you would scroll to the bottom and it would have a screen that looks just like that PMI screen, and you want them to match up. Make sure that it shows 0.45, that the base loan amount and the total loan amount match. Okay. You'll also want to make sure you'll go to the mortgage insurance and you'll make sure that that matches. Okay. So we go to mortgage insurance and let's make sure it matches, right? So 380, 800, that matches. 1713, that matches. 382. So if this does not match, Jessica Fernandez, sometimes in the past, she got this right. There were a few times where she didn't know, so we did some training and she got a little bit better. But this, in the past, she would get confused because she would pull the MI cert based on an 85.382 LTV. So the coverage level would then adjust. Do you see how calculated LTV says 85 right here, Grace? So in the coverage level says 12. But if, let's say, an underwriter did it incorrectly or you did it incorrectly, this LTV would then show, like, let's say 86%, and then this would jump the coverage level to 25. Well, now it's being done incorrectly.
Well, quick question about that. So, like, in this particular case, the addendum came in, there was supposed to be a change. Do I have to get back with the underwriter and let them know that the mortgage insurance?
So that's what Brodger did. Is so she came in here and saw that we had to change the loan amount. We'd already had the loan clear to close. So she's like, okay, well, now I've got to adjust the lock and get a new MI cert to match. So what she did is came in here, she submitted product and pricing and went through the process of submitting this. Once the lock updated, she then contacted the underwriter and said, I need a new clear to close with the correct purchase price, the correct loan amount, and the correct MI cert. Does that make sense, Grace?
Yes. So
what we would do in this scenario is if you got an amendment in the future, and this would be the same thing I think you just did yesterday, Tequila, on the Chirvoga file, right? Is you come in here, you submit your lock change, and you would then change this. So it did appraise for 458, so that's important. You put that there, but the purchase price is 448. You see how here's the base loan amount? So when you look at that amendment, 380, you put the base loan amount here, okay? But then 0.45 comes down here, and that takes your total loan amount to 382,513.